Welcome to Stock Market Funding 3/16/2010 FOMC Meeting Day. FOMC Meeting is going to be coming out at 11:15 today, but prior to any of it, what I'm going to show is the VXN. This is this right here, and it equals Nasdaq 100 Volatility Index. And basically, just as I've showed the S&P 500, the VIX, which is related to that, I'm going to show a daily chart here. And this is the 2010 move. And I'm going to show that when we started out the new year, this was at January low. And when we went straight up here in January, the Nasdaq comp and Nasdaq 100 sold off. And this was that volatility. This is when fear is there. This is when fear is there. Then when we put in the lows in the stock market, we put in the highs here, we faded back, we double tested a lower high right there, and ever since we've come straight down, and the Nasdaq comp has gone straight up, and so has the Nasdaq 100. And this is these two indexes, Nasdaq comp, Nasdaq 100. And basically right now it's telling me that there's no fear in the market, that there's complacency in the market, and that when we put that blow off bottom here in that VXN and the stock market put a top in the indexes, they run invert of each other, and we broke out here and markets broke down. And on stockmarketfunding.com we were short the Nasdaq 100 and equities, and we called the market top, and that was the top that started to get put in. This was on 111 right here on this one. And you can go to stockmarketfunding.com, click on the trading videos, look where we called the tops of the markets. And we also, toward the later or last day of the month and the first few days of February, we said the markets had put a short-term bottom in, and they did. And we came straight down. And as we came straight down, markets have gone up. And I'm just letting people know that they should be watching here, that if we don't break that key support level right here and we start to set up and make a move higher, then the markets are going to come down. If we break that support level and come down to this lower support level here, then that means that the indexes would pop back higher, go higher for the bulls, that is, and this would be an area of where I feel would be an extreme low. And that means that everyone's on the same page. This is what this looks like. And here's where it went breaking out, went straight up, and markets went straight down in 08. And even when we were in bull markets from 2002, we came all the way back down, and we consolidated for a couple of few years, and it had baffled everyone. So basically what I'm trying to tell you is that we're at extreme low levels, really, from where I'm just telling you, we're, in my view, we can't go lower and the markets can still go higher. But I can tell you what, if we put a blow off bottom like we did here and we tick upward, then we're going to be taking a lot of short positions. We're not at that juncture yet. We're going to find out. This is a daily chart. This would be what we call a major bottom. If we don't break support and we consolidate and start to go upward, that means our upside is limited in the market. People are complacent. There's no fear right here. There was fear here and here. Then the fear levels came down and the markets were going higher. And people, once again, on lighter volume in the exchanges, it doesn't matter. What does matter is that we are at a very major support level. And basically you can see the weekly level here back in 07. We're not in a ripping, roaring bull market, and we're clear down here. We had that double up week there in the VXN. Okay, the other side of this is that Nasdaq 100. This is called Nasdaq 100 Volatility Index. So when this goes higher, this will go lower, and the Nasdaq comp would go with it. So basically, if we don't break the support level, people, you could be very aware of the fact that you better start getting some risk management into play and protecting your positions and have your, census put together here now. And it's an FOMC meeting today, and this is a weekly level. And, these other times we've had these double week breakouts like there, which we traded back in October. We traded this one here. Now we're going to see how we set up on this weekly indicator. Remember, the lower it goes, the more bulls are in the market, and there's no fear. Nothing can go wrong. And that's about the time we do start to make a change. We called it perfectly. It's a little bit of a lagging indicator, but we did it perfectly. Go to stockmarketpundit.com, look at our live trading videos when we called the market top in January. Right there on 110, I said the stock market put in a top and we were going to go down. And 1, 2, 3, 4 weeks, we went straight down. And this went straight up. And now we're coming back down to these weekly levels here. This is that lower support line. This would be this support right there. So basically, if we don't break below here on a weekly level, then that means that, and we set up a pattern and start to uptick, then that means that these indexes are going to have a lot of problem going higher through their resistance levels here. All of them. Because you've got to break down here, and that would send these higher through resistance levels, but then somewhere where we're going to put a blow-off bottom in, and there will be another downturn. Be careful. Be aware. We called that move perfectly there to that. Then when we came down, I said that we, right here in that peak on 131, I said we were putting a bottom in, and that was a little over 5 weeks ago. And you could see 1, 2, 3, 4, 5 weeks down. We called it perfectly. And I'm just letting the public know, and short-term traders, and I'm training our new students in the SMF Pro Trading School on what to be aware of. So if this goes higher, I'm going short equities and indexes. If this goes lower, I'm going to buy short-term for the long side of the market to go higher. And we're going to measure it. It's an options expiration. There's a lot going on this week. Beware.